Hi, today is Sunday, March 12th, 2023. I'm Jason Shapiro with crowdedmarketreport.com. Today, I was going to talk a little about breaking trading rules. And the reason I bring it up is because this last week, I actually got off of my process, which is something that people who have listened to my videos and people who read my newsletter as part of Crowded Market Report know that I am very against. My whole mantra is have a process, be disciplined to that process. Right? And this last week I completely broke discipline, which is maybe once in a 2-year or once in a 3-year event for me. And I'm going to speak a little bit about why I did that and what the dangers are of that. And I think I'm speaking about this just as much for me to ingrain these things in myself as I am for everybody else, because these lessons are extremely important. Let's start it like this. I came into this week long NASDAQ futures, which is a trade that I had gotten in my process somewhere back in January that I'm still sitting on. I am long cotton futures, which is a trade I got back into way back like in the fall, and I've still been sitting on. I was long 10-year futures, 10-year fixed income futures, which is something I just got into last week. And those trades to me are all risk on trades, right? Stocks going up, bonds going up, in other words, interest rates going down, and cotton, which is a commodity, going up, are to me all in the recent markets. What that's been is, interest rates come down, stocks and commodities go up, and dollar goes down. So those are all risk on trades. Then I had one trade that I considered in that whole thing to be risk off, which is short yen trade, which, if stocks were going down, dollar was probably going up, yen was probably going down, was part of it. And these were all trades within my process, but I then kind of looked at it and, resized, I upsized the yen trade to help offset the fact that I had 3 risk on trades on. And that's what my portfolio came in looking at this week, and it's been doing well, because earlier in the year I had the risk on trades on, and then I started getting some risk off trades on sort of in early February, which were more in the form of short silver and short gold and short yen and short some energy stuff. And slowly over the course of February, the short gold, the short silver, the short energy came off, the yen stayed on. So I've kind of increased the yen short to balance off the other stuff, and that's fine. This week, I don't know what it was exactly that set me off, but I started feeling like something wasn't acting right. I think, some people argue it's a fact. It's just a function of sort of experience and the subconscious that you get from sitting here and watching these things all the time may trigger something in the past that you're not even aware of. But all of a sudden, I just thought that things were acting wrong. Right? I have trades go against me all the time, and that's acceptable. But at least I should understand what's happening so that I can know, Things just weren't acting right. The whole correlation matrix started to break down, and it just kind of felt wrong. And then we got some, the COT data. This doesn't help. COT data has been delayed now for a few months, and we're 3 weeks behind. And while I have an algo that does its best job that it can, to capture what's going on when it's missing like that. The data came out on Wednesday. They're trying to catch up. And when I looked at where the data actually was as of that date versus where my algos were showing that it should have been at that date, there was a pretty big gap, which means that I'm not catching here, right? There's something I'm missing that I'm not catching in the data. And so that got me nervous. And so immediately, kind of when that data came out Wednesday, like the reopen on Wednesday night in the markets, I sold my NASDAQ futures. The thought being, why take risk when you can't even quantify or understand the risk you're taking at this point, because the data that I'm using is losing accuracy because of what's going on with the CFTC and they're delaying the data. So why take risk? I'd already half-sized everything because of that, but I just got out of the NASDAQ. That was my first stop. And then I watched, and Thursday trade came. And at one point Thursday, risk assets were moving up quite a bit. And yet cotton, I'm watching, wasn't moving up. It was just flat. So I was like, all right, forget this one too. I got out of cotton. Just get out of it. So now I'm kind of left with this short yen position and this long 10-year position. Then the yen, Thursday night was the Bank of Japan meeting, and the yen, again, the correlation on Thursday in particular just lost, right? Stocks ended up kind of getting tanked by the end of Thursday, and the yen wasn't going down, it was going up. And there was a Bank of Japan meeting coming in that night. The yen has come down a lot, obviously. People have given up on the fact that the Bank of Japan was going to change their policy by this point, which was the contrarian trade was fading that idea and being short yen. So before the Bank of Japan even met, I just got out of my yen. And what happened was, it couldn't have been 10 minutes after I got out of my short yen, the Bank of Japan said something and the yen dropped like 100 points, okay? Which is fine, right? By the end of the day on Friday, the yen was up more like 100 points, so even better. But so this is kind of the reasons, and you could build these reasons almost any time, but these are the reasons why I got out. The main thing I believe subconsciously in my mind was the fact that I rely so much on COT data. COT data has been very delayed. I've been trying with my algo to capture the data, and as the real data is coming out, I'm finding that my algo is not really capturing it that well. So therefore, what am I doing, right? So I got out. And what I got out of, if you look at it, is stuff that started to lose money. The 10 years, I'm still in, right? And maybe I'll get out of those, if they start to fail or something like that, but those have been working. So I'll ride the winner, cut the loser, and be done with it. And that was sort of my justification behind breaking my own rules, right? So that's kind of where it is. And I think that the danger of this whole thing, it's great that I got out of NASDAQ and the NASDAQ is lower and it's the yen and the yen's higher and cotton's lower, and that's all wonderful. But what it can lead to is, bad positive confirmation bias. I could sit here and be like, oh, look how good I am. I traded around these positions and they all worked and I should do that all the time. Wrong. It's not going to happen, right? Unless the COT data is off like that. I'm not doing that, right? Having said that, now that I've finished this whole thing, I think that was really the main reason why I sort of broke process, is because my process relies on this data, and this data has been hugely delayed. And in trying to fill in for those delays with my algo that creates, I noticed that my algo is, as time goes by, is getting further and further off. So therefore, I'm flying in the blind here. So why fly in the blind? I'm not going to lose money on something like that. There's plenty of time to make money in this game, as long as you don't do something stupid. So I felt like that was something stupid, and that's why I got out. So anyway, that's kind of the lesson for today. Certainly happy to hear any questions or comments. Please join us at crowdedmarketreport.com, or subscribe to us on YouTube, or follow us on Twitter, or whatever your favorite outlet is. And we hope to see you there, and I hope everybody has a good week. All right, thanks very much.